All right, we'll start with a little video. I hope you guys recognize it.
Hello?
Hi, Mr. Davis. This is Ron calling you from the Daily News. How you doing this morning?
It's Davis, and I'm not interested.
Okay, I'm sorry to bother you. Have a nice day.
Wait a minute. Wait, that's your pitch? You consider that a sales call?
Well,
You know, I get a call from you guys every Saturday, and it's always the same half-assed attempt. If you guys want to close me, you should sell me.
alright.
All right, start again.
Okay. Hi. This is Ron from the Daily News. How you doing this morning?
Shitty, what do you want?
It's not what I want, sir. It's what you want.
Ron, now we're talking. All right, what are you selling me?
I'm offering you a subscription to the Daily News at a substantially reduced price. We're trying to reach out to people that have never had home delivery before.
Right, so basically you're saying that everybody else who already has a subscription is getting fucked on this one?
Yeah, I guess so.
All right, well, I can handle that. So tell me, why should I buy your paper? I mean, you know, I mean, why shouldn't I get the Times or the Voice, you know?
Well, the Village Voice is free, sir, so if you want it, you should certainly pick it up. But the Daily News offers you something no other paper can, a real taste of New York. We have the best features, more photographs than any other daily in New York, and we have the most reliable delivery in the city. Now, what do you think?
You know what I think, Ron? I think that was a sales call. Good job, buddy.
So you're going to buy a subscription?
No, I already get the Times.
All right. Anybody recognize that movie? Really? Wow. Boiler Room. Go watch it. That and Glengarry Glen Ross. Right? So what Americans are good at is selling, right? Sometimes bullshit. What Europeans are good at is being modest and building things. So I recommend, and we'll talk about this a lot today, is how to pitch and how to sell. So what is a pitch? A pitch is a way of telling a story with a call to action, right? So we'll dig into that. My background real quick, I can skip this if most of you were downstairs anyway when I was doing a talk. Who was downstairs? Okay, enough. So I was born in Ukraine real quick. Now I spend half my time in California, half my time on an airplane, professional airline passenger, and travel around the world a lot. Did about 23 countries last year. Help a number of accelerators get their startups to pitch better, tell their stories better. We've now started CCC Startups, which is a venture fund and entrepreneur education organization. And CCC Startups brought you Startup Adventure that's downstairs on the main stage all day today. So that's a little bit about that, and you'll see more about that. So like a boss, right? What is a boss? Boss means confidence, right? You have to know what you're talking about. You have to know your shit or know your shit, right? So first things first, you have to have confidence in what you're talking about so you can focus on your performance, right? So we're gonna dig into all of that right now. So first of all, who and why are you pitching? Okay? The first people you'll be pitching will not be investors. The first people will probably be your family to allow you to do this crazy startup thing, right? Does that sound familiar? You have to kind of tell everybody and convince your parents that you're not crazy, that you're not gonna quit your big job at a bank to do this crazy startup thing, that they don't need to help you and talk you out of it, right? Then you're gonna be talking to co-founders or would-be co-founders, trying to convince them that this is a vision, not a hallucination, right? If you can convince one other person that this is worth doing, it is a vision. If you can't, it's a hallucination. You should probably think twice whether you should spend your time on it, okay? So, like I said, pitching is storytelling with a call to action. You want to motivate that other person to do something and to get them to do it now, not later, right? You want them to act right now. You want to create that motivation. When you're pitching your startup, there are generally 3 different types of pitches, right? The first being the 90-second elevator pitch. And the call to action there is to get the meeting. Big mistake is, a lot of founders will just try in that 90 seconds just throw as much information there as possible. It's the product manager disease. I've worked on this for so long that I'm going to tell you everything about this. But that's not the point of that conversation. The point of that conversation is to get enough interest for that person to want to meet with you to hear more, right? Think about that for a second. That is very, very important. The same thing when you cold email somebody on LinkedIn. I can't tell you how many times a day I get a wall of text in an email from somebody I don't know. Do you think I'm going to read that? Like, even if I wanted to, can I just sit all day long, just sit there and read emails? How many emails do you think a venture capitalist gets on average per day? Think about that. A couple of hundred easily, right? And most of them are like this wall of text. They don't have the time, even if they had the desire, they don't have the time to read through it. So your elevator pitch is the same thing. There has to be a quick explanation, some context, and a hook, right? Or an introduction. Somebody's already filtered this for bullshit. And if there's a warm introduction, if I go to my friend and introduce startup to them and say, hey, you should listen to these guys, there's a much higher chance that they'll actually do that because they trust me that I'm not going to waste their time, right? That it's a good match. That's very important. So 90-second elevator pitch, no slides, obviously, right? We'll get into the content in a second, but your hook, your call to action is to just get the next meeting. Exchange business cards, make it easy on the other person, follow up later, okay? The next kind of pitch you'll have is this 3-minute public pitch, right? And this could be a startup demo day when you're 1 out of 10, 20, 30, like last Y Combinator batch was 115 companies over 2 days. Goal number 1 there is to stand out from the other companies, right? So people in the audience, they will remember 1 or 2 that apply to them. Your job is to be one of the 1 or 2 that they remember, that they want to talk to, and then again, get the meeting, right? So you do want to have something memorable in your presentation. You can't just talk to your feet and mumble, mumble, mumble. It could be the most interesting, innovative thing in the world, but if your performance sucks, right, you're on stage, nobody's going to remember it, right? So you do have to perform. And the other thing is, again, you have to have a reason for them to take a meeting with you. Right? There's got to be an ask at the end. Now, finally, if you're successful with meeting number 1 or meeting number 2, this is the one-on-one, full of content meeting to get the deal. You have the person's full attention. They're there to listen to you. You plan for 20 minutes. If it goes well, it'll stretch into an hour, right? So that's a completely different kind of pitch. And when somebody says, send me your slides, that's also kind of bad, right? I never send slides ahead, because if you think about it, and you'll find out by the end here, your slides are just a visual cue, right? If you're going to send a document, it shouldn't be slides. It should be like an executive summary, like a 1-pager of text, right? So we'll dig into that. All right, so let's talk about content, ingredients of your pitch, whether it's a 90-second, 3-minute, or 20-minute pitch, right? There's various forms of the content. And the first most important thing is traction, right? Nothing matters more than traction. What is traction? If you have a symmetric business model, if you have a SaaS product that somebody pays for, you're showing people signing up and revenue. If you have a free product, you want to show really fast growing downloads, and you want to show adoption, people using it, right? Because they're paying you with their time. They're paying you with their time, so then you can sell their time, right? So quick side note, why did Facebook buy Instagram for $1 billion? Anybody think about that? Everybody was shocked, right? But Instagram was worth $1 billion to Facebook because Facebook realized that 80% of the time people spend on Facebook is at looking at pictures, at photos, right? And all of a sudden there's this really fast growing way to just look at photos, right? Instagram could have ran away and eaten Facebook. That could have been very, very likely. Right? So you have to think about what traction means to your business model. And if you have traction, you always lead with traction. Because if you're pitching an investor and you say, hey, this thing is growing like crazy, I don't really care what it is. If this thing's growing 1,000% a week, a month, let me get my checkbook. You can tell me what it does later, right? But it's a money grenade. I'm going to jump on it. All right, so think about that. Traction is very important. So that also means when you're building your startup, you shouldn't spend a penny or a minute of your time on anything else that doesn't push traction, that doesn't show adoption. You should not spend a year and a half trying to build the most perfect product that nobody's going to use. You should get out there as quickly as possible, invest all your time, all your money into getting users to use it or customers to sign up and pay for it, right? So again, if you have traction, you lead with traction. If you remember one thing, remember that. Actually, remember the next thing as well. So when you open your presentation, and when somebody comes up to me and starts telling me about their company, I stop them in their tracks and ask them, who is the customer? What is the problem you're solving? Without that context, I have no idea how to evaluate whether what you're doing is interesting as a business, right? You want to build, if you come up with a technology and then you're trying to build a business out of it, that's usually a very painful, long process. If you identify a very interesting problem in a growing market, right? You can identify exact customer and what they're struggling with. That's very interesting, right? Who's the customer? What is the problem? It's called a who's a customer problem framework even, right? 500 startups, if you get into 500 startups, who's ever by chance been part of 500 Startups Accelerator or seed investment? Anybody in the room? No? Okay. So I'm sure a lot of you has anybody applied to 500 startups? Really? Nobody? You think you did? Okay. Accidentally. So you've applied to all the accelerators? Okay. I don't recommend that, but you go against the grain. You swim upstream, you're a salmon. Yes. So, well, no, but that's a different story. We can talk about that later. You're gonna learn this, and top accelerators, Techstars, Y Combinator, certainly 500 startups. It's always about a market problem and the customer. It's much easier to please a very narrow audience of a customer and make them obsessed with your product and expand from there than try to build something for everybody. If you try to build something for everybody, it's not going to work, right? I do a user experience workshop and we talk about personas, right? When you build a product, you want to narrow personas and you want to solve their problem. So I highly recommend you think about that and be narrow. Right, so it has to be a painkiller, not a vitamin. It has to be something that solves a real problem. It's not just a nice to have. Sure, there are lots of businesses that are nice to have and they provide some benefit, but those usually grow painfully slow, right? You want to provide somebody, if somebody breaks their arm, are you going to give them vitamins or are you going to give them a painkiller? You want to give them a painkiller. They will pay any amount of money for it, right? Usually if you can help a company or a person make money or look better, etc., that's something that they will pay you for, right? Either with their time or money. Okay. Now you show evidence to make it obvious, right? So it's expected that you know your business better than the investor you're talking to, right? If you come to me and you pitch me a random startup and I know your business better than you, you're in trouble, right? So you have to come up with evidence from the industry, somebody that I trust, some source that I trust, to demonstrate that this is really a painful problem, right? So think about research. Gartner, all sorts of research firms, come up with some numbers, show the market, show some evidence. How is it currently being solved? This is going to be big. This is very, very important, right? With every technology paradigm, new paradigm, right? There is a new and more innovative way to solve the same old problems. Faster, cheaper, better, etc. Right? So if you think about it, computers first came along, personal computers came along in the 70s, and the pitch was, well, hey, you do accounting by hand right now you can do it on the computer, it's way faster. You should buy this computer that by today's terms is worth as much as a nice car, right? Because it'll solve your business problem, you can do accounting. A little bit later, the pitch was, okay, you've done this thing on your desktop computer, now you can do it on the internet, and because it's connected to other nodes, it's somehow better, faster, cheaper, etc. Right? Next, it was, well, you used to do this on your computer, and now you can do it on your phone in your pocket. And we're now entering, with the Apple Watch, we're really entering the wearable world, right? Where things are faster, more natural, more great, etc. So you're going to see a lot of solutions that come about this way. But you want to think about, how does the customer currently deal with this problem, right? If there's nobody trying to solve this problem, it's not a problem. It's only in your head, right? If you have to convince every person that you talk to that this is really a problem, somebody needs to solve it, then maybe it's not. Maybe you just convinced yourself. Maybe it's a hallucination, right? Now, huge mistake if you come out and say, hey, we have no competitors, right? Have lots of guys show up and just, go on stage. We have no competitors. Drop the microphone, that's it. Well, guess what? You have no competitors, there's no problem, there's no market, you have no business. You always have competitors if it's worth solving, if it's a problem. It could be that somebody's doing it by hand right now. It doesn't have to be the same technological way as you do it, right? It's not a direct competitor. But there are people, if it's a real problem, people are currently solving it in other ways. And don't be so sure and so quick to decide that your way is better, right? You have to prove that to yourself, right? So hard, expensive, difficult, how are you different and better? Not just different for the sake of being different, but you have to be demonstrably better, right? And you have to be better than the old competition. You will never beat a big company at their own business, at their own game. You will never catch up to them. They will out-advertise you, etc. You have to find a new way, probably with a new technology wave, to flank them, right? Military term. You go, small force goes around a big army and surprises them. This is why startups are disruptive, right? There's an existing market that does business in a certain way. Those businesses have a lot of employees and management and advertising, everything built around a particular business process. Here comes a little startup that does it a completely different way that's way faster and better. That's what you want to show, okay? Now that I know if you have any traction, so it tells me what stage your business is at, who the customer is, what the problem is, how it's currently being solved, right? Now you can tell me what your solution is. Now I have enough context to maybe get excited about your solution. Think about that, right? Only now can you tell me, here's how we do it. So this is the what, and the next step, right? Hopefully it's better, faster, cheaper, new, right? And it's obvious at this point. The next is the how, the mini demo, the 3 screenshots. Here's what we do. You already have all the context. And 1, 2, 3, user signs up, then they get this, then they get that. Now I understand what is it you do and how you do it. Wow, right? We're about halfway through the presentation at this point, right? This could be in 90 seconds, you can explain all of that. You don't need 100 slides. You don't need bullets because bullets kill presentations and people, right? You need very simple visual cues. Have you seen any bullets in my presentation yet? Am I explaining all the information clear enough for you? Right? You don't need to read paragraphs of text because you'll either listen to me or you'll read my presentation, not both. Right? Now, now that I know who's the customer, what's the problem, how's it currently being solved, how do you do it, right? What is it that you do, how do you do it? Now let's talk about the market. And the market has to be big. Why does the market have to be big? Well, most startups fail, right? And if you're going to buy a lottery ticket, you're going to want to play lottery for a lot of money, right? So it's risk reward. If you're starting a restaurant, most restaurants survive. If you start a startup, 2% survive, right? So you want that outcome to be very big. And it's not just a desire to play the lottery, but the way investors think about their investments and how they build their portfolios. The winners have to make 10 times, 100 times more money, or 1,000 times more money, right? Typical venture portfolio, let's say out of 10 companies, 8 will be negative, right? When they write a check and make an investment, they all look great. They all look amazing. But the fact of the matter is, if they're a good fund, 8 of the 10 will fail, 1 will do okay, and 1 will do really well and pay for all of those losers, right? So you need to get a 10x just to return the fund. And that's years and years of waiting. So investors are really looking for things that will be big, right? Because they need to return. Otherwise, why bother? I can just go buy some stocks. I can sell them tomorrow, make my 10% and be done with it, right? Think about that. So a big market and a market that's growing fast. It is much easier to build a business in a fast growing market than it is in even a big one, but a static one. Why? Because again, you're not going to beat a existing business at their own business. You just won't. You don't have enough resources, you don't have enough money. So if a market is naturally growing, there are new customers to be had that anybody can have. Either the old companies in their way, or you can have in your new way. And hopefully you're better, faster, and more attractive to new customers. If it's a $100 billion market, but the market is not moving, that means every customer that you will get, you have to take away from somebody else. And that's much harder to do than to get a new customer. Right? Make sense so far? It's all obvious, right? But you don't really think about it in the same order usually. And talked about this a little bit downstairs, but what is your business model? Right? Now that I know who's the customer, what's the problem, how's it currently being solved, what is it that you do, how do you do it, how big is the market, and what are the market dynamics? Next, I want to know, how are you going to make money? Right? So if the market is top down, it's a $1 billion market or a $100 billion market, and we want a piece of it, this is the bottom-up math. Right? So the bottom-up math is, it costs us this much to advertise. Out of that advertising, we get this many visits. Those visits convert into this many downloads. Those downloads convert into this many premium upgrades, etc. It's arithmetic, right? It's not even geometry. It's not even algebra. It's very simple arithmetic, but that's the way you should be thinking about your business. You're measuring everything, and you want to know and be able to communicate how you're going to get these customers, how are you going to get these users. Make sense? So there are two types of business models. Symmetric business model. Right? This is where the customer pays for the experience. They buy a subscription, right? They pay you $20 a month. You solve their problem. They're your customer for, let's say, 2-3 years on average. If it's a SaaS product, it could be a more expensive SaaS product where you charge money up front for onboarding, and then you charge them a few $100s, and you have long-term contracts and all of that, right? It could be a download. It could be a paid download in the App Store. Right, but you know how much it costs you to advertise to get people to look at the app and all of that. Right? So that's a symmetric. And the asymmetric, which is actually a lot harder these days, is when somebody else is paying for the customer's experience. These are advertising-driven businesses. Right? So think about it. If you're not paying for the product, you are the product. Right? On Facebook, you are the product. Your time on Facebook is being sold to advertisers. But you get to connect with your friends and family, right? That's the benefit that you have. So in markets outside of US, Jonathan, if you caught Jonathan's talk downstairs an hour ago or two, he was talking about, first world problems, right? So most of the social startups and startups with asymmetric business models come from the US because they're focused on a large market with first world problems. You have so much time on your hands that you're going to spend it playing on Facebook or doing social this or social that. It's much more difficult out of smaller markets in Europe to come out with something that will gobble up the world. Right? If you look at all the big social networks, they're all US. Bebo popped up its head. Well, the founders were they were Brits, but they were operating in the US anyway, and then they quickly died. Anybody remember Bebo? That's what I thought. They sold for $850 million to AOL. And then they bought the company back for about $3 million a few years later. Good job, AOL. Somebody got fired over that, I'm sure. So we see a difference, yes? Symmetric, asymmetric business model, right? But you need to understand what you're getting yourself into, because the way you're going to acquire customers is going to be completely different, right? Depending on what you plan to do with your business. You don't have to jump in and start making money right away. That's not a necessary component. But you have to show at least an understanding that this is how you'll eventually make money, and you have to understand how, what kind of scale you need to be to get to make money as a business. At the end of the day, you're not doing this just for fun. Yeah, you should enjoy what you're doing, but this is a business. Don't be mistaken. A startup is a thing an experiment that will turn into a company, hopefully one day, right? Talked about this a little bit downstairs as well. So does it scale, right? This is going to be important that you prove this. This is not a question that you're going to get up front, but it should be something that you intertwine into your pitch, showing that this scales, and it should be part of the discussion in your business model. How does it scale, right? So revenue per employee. These numbers are about a year old, right? But when you show financials or you talk about it, usually it'll be in that 20-minute meeting. It won't necessarily be in that 3-minute or 90-second pitch. You want to land somewhere in the middle here, right? So if you look at Craigslist, right? Craigslist does $3.6 million per employee. That's pretty good, except they have only 20 or 35 employees, right? So Craigslist is kind of a weird company. Now on the other end, we have McDonald's that does $27.8 billion in revenue with 1.7 million employees, but that's $64,000 per employee average. You will never build a McDonald's today. That's not a startup. Right? You're not going to go to a VC and say, we need to hire 1.7 million people. Like, well, good luck. Have a good time. You want to land somewhere in the middle, right? And this is a sanity check for you when you're doing your projections and numbers. This is also a test that any investor that understands business is going to be not necessarily asking you explicitly, but they're going to be looking to see if you're crazy or if you know what you're talking about. If you go in with a projection saying, we're going to be the fastest growing company in the history of companies, we're going to make $100 million per employee in year 2, then I'll say, good luck. I'll see you in a year when you'll still be raising your seed funding. It's just not going to happen, right? So you have to shoot for somewhere around $1 million per employee per year in year 4 or 5 of your company. That's kind of a realistic number. That's a realistic goal. If you get there, that's actually great. That's very efficient for a company. Okay. Now, something that you need to have a handle on is the fact that you're dealing with an internet-driven distribution model, right? Unless you're in bio or something that's heavy-duty sales-oriented, you know, and businesses that require a heavy sales effort are going to be less attractive to current venture capital trends, to current investors. Currently, investors are looking for businesses that can leverage online advertising in one form or another to grow their business. This is the most efficient way of gathering users and customers right now. So even if you're a programmer or whatever else you are or your team consists of, you need to have a firm handle on internet-driven distribution business models. You need to understand how online advertising works and how are you going to leverage it in your business. You have to know this. This is like learning how to read. You have to know this, right? You don't have to necessarily execute it yourself, but even if you're hiring somebody or working with an ad agency or anybody else, you won't be able to make intelligent decisions unless you know how this works, okay? So if you don't know how this works, learn. And this has to be part of your pitch. It has to be intertwined to your pitch. This is how you gather customers, right? Actually, some of the first money that you raise, a big chunk of the first money that you raise, you should reserve for this. Let's say you raise $100,000 or 100,000 euros in seed money. More than half of that should go towards marketing experiments, right? Another mistake that's being made, right? If you come out and say we have no competition, that's one huge mistake. The other is we haven't spent $1 or euro on advertising. Everything we've done is organic. Like, well, that's not very good because you probably don't know what the hell you're doing online and you don't know how you're going to grow this business to the next level. You have to do experiments with advertising. You have to measure your numbers and understand if you can profitably attract customers and users or not. And you have to be able to demonstrate that in your pitch. How many of you have spent, you know, a couple hundred euros at a time and done advertising tests to gather some numbers? Okay, so everybody's hands should be up, right? So if you haven't done that yet, do it. Spend 100 euros, not on some bullshit, right? Not on travel or, you know, I would say it's more important than going to a bunch of conferences, right? You should go to good conferences and learn, but don't spend your time socializing. Spend your time trying to attract customers to your product, right? Now that I know who's the customer, what's the problem, how's it currently being solved, what do you do, how do you do it, how big is the market, what's your business model, how do you plan to get users? Now prove to me that this is not just theory, but you and your team are capable of doing that. You have a track record. The main ingredient in an early company, especially with no traction, the only ingredient is team, right? At first you have an idea and you have a team that's going to execute that idea, that will build that product and sell the shit out of it, right? You have to be able to prove that. So what are the ingredients of this team? First of all, you need to know the business you're getting into. If you just graduated out of university and you've never had a job, but you're going to go and beat, you know, Oracle or SAP or whoever big company, I'm not going to believe you. You have no track record. Why should I believe that you are, you know, the smartest person around? I don't believe in geniuses, right? Because 999 times out of 1,000, those geniuses are not as smart as they think they are, right? So get some experience and know this problem from the inside. Because you might have identified an interesting business, an interesting problem, an interesting market, even an interesting way to solve it, but maybe somebody that has a couple of years experience in this industry and has a little bit more information than you will be the one that solves it. Or at least will have the connections to get the business going faster, to get bigger partnerships faster, to get the initial customers faster than you, etc. So you have to know the business you're trying to get into. If you don't, you should go work in that industry, spend a little bit of time, and go from there. All right? The next piece is engineering. Guess what? If you're in the software business, if you're in the software and hardware business, you have to be able to build that product. It sounds obvious, right? I can't tell you how many pitches I've seen where it's a couple of smart, MBA, Stanford, Harvard, doesn't matter. Could be the best university in the world. But if they never touch code, they have no idea how to build this product. This is where they're going to get stuck. That's what's called execution risk. Can they actually do it? They might be able to get away with, some partner or outsourcing company to build their prototype or minimum viable product, but they're not going to go much further, right? So you have to be able to build product, and you have to be able to design. Design is very, very important. 99% of the world does not understand the magic of programming, right? All they know, your interface is the product. So their experience with your product is super important, right? On a mobile device, you have 10 to 15 seconds after somebody downloads your app to keep them, right? Only 5% of apps that are downloaded are opened for a second time. And that doesn't say much, second time. 95% get tried once and deleted. And all of this advertising, all of this PR, all of this begging and pleading TechCrunch to write about your startup, all of that's wasted if your product sucks and it's unusable. Right? So design is crucial. I'm totally biased. I'm a designer by education, but it's so, so important. Right? Look at your home screen on your phones and look at the apps that you use. Are any of them ugly? Probably not. And it's actually not just about visual design, it's about the experience. Right? Is it a pleasure to use? Is it fast? Is it efficient? Can people understand it clearly? Invest your time into understanding design and getting the best possible designers on board. More important than the specifics of the engineering until you get to certain big scale. Okay? Now, what is your competitive advantage? Unfair advantage. I'll give you a hint. It's not about being light. It's about being strong in a particular area. Usually this goes back to the fact that maybe you were in this industry for 10 years and you know this problem better than almost anybody. Right? That's a huge competitive advantage. And when you're pitching, you also want to intertwine in there your accomplishments. This is a time when you want to brag, but be subtle. Right? So you want to subtly brag. Right? How much money have you raised before? You want to kind of intertwine that in there. And from who is actually very, very important. That's a strong social signal for other investors. If you say, hey, we raised seed money from Sequoia, any other investor is, they're going to have to look for a damn reason to not write you a check at that point, right? But if it's, well, we raised $1 million from my rich uncle, and he owns a sausage factory, well, that's what we like to call dumb money, right? That's probably not going to help you, right? So you see the difference, right? It makes sense. Now, partnerships. You're going to think that partnerships are going to solve all your sales problems. And I've heard this a million times. There are a bunch of European startups that come over to Silicon Valley. They're pitching saying, you know what, we're just going to find partners in the US that will sell our product. Why? Why would they do that? Right? Reality is that partners in most businesses, almost all of them, will be responsible for maybe 5% of your sales. 95% of your sales, you're going to be responsible on your own. So you have to know, you have to learn and love sales and marketing and advertising of your product. It's not something you can outsource, right? But partnerships are an important indicator and they're validation for somebody maybe outside of the industry. If you come and pitch an investor and say, hey, we have a partnership with the biggest company in our industry, all of a sudden that's some interesting validation. The validation is that this company thought that it would be okay to use their brand, first of all, to associate with your little startup, but also that they're investing their time and resources to working with you. That's actually an important indicator. So that's what you think. That's how you should think about partnerships. And growth, again, growth is the number one thing. So if you're going to spend any money on your startup, don't buy furniture, don't buy anything. Don't spend too much time writing code for something you don't know for sure that somebody's going to use. Focus on investing as much as you possibly can of whatever money and resources and time that you have into getting growth and traction in your product. Until you have that, until you know exactly how many dollars you have to put in and how many you get in how long back out of your machine, out of your sales and marketing machine, don't spend money on anything else, okay? Now, we're going to talk a little bit about the actual performance of your presentation. So we talked about the content, right? So we know who's the customer, what's the problem, how's it currently being solved, why is it not adequate, what you do, how do you do it, the top-down market analysis, your business model, your accomplishments, your team, and now we're going to move towards closing the deal, right? All right, there's got to be an ask. So that's the content. Did you guys already know all this? Did I tell you anything new? Was that interesting? Okay, good. So we'll keep going. Otherwise, you know, just let you have lunch. So the best decks are on the news, this over the shoulder, right? I already kind of talked about this a little bit, but people are either going to look at you as the performance or read your slides. Your slides, just like mine, if you want to use them as an example here, are just a visual marker for what I'm talking about. I am the presentation, not the slides. You're all looking at me, you're all listening to me because I'm giving you all the information. But my slides are a good way for me to keep on track with what I'm talking about and for you to have a visual cue. Most people are very visual. They need to understand this. When you flip your slides, you want to give people a second to absorb what it is you're talking about, right? And then listen to you. All the attention back on you. By the way, standing, you know, because we're reading left to right in this language, in English, you always want to be on this side of your slides. Right? Visually, they look at you, they look at the slides, they read left to right, and they come back to you. That's a little hint as well. So body language is crucial. And I'll tell you that we'll kind of go towards the end here. Maybe we'll do some questions after that. So body language. So I had the fortune of studying with Jerry Wiseman. He's in his 80s now. He's a guru of presentations. He taught John Chambers how to pitch. Don Valentine from Sequoia Capital, venture capitalists, you know, one of the most successful venture capitalists of all time, basically said that they've kind of analyzed it, and that training is responsible for about 8% of the value, increase in value in Cisco's IPO. It was all in the presentation. And most of that is in body language, right? You can mute political debates, and you can read people's faces and read their body language, and you'll see who's winning, right? So how you present, how you perform on stage is incredibly important. And when you're all busy trying to remember your pitch and you're nervous, all of that loses. You lose 80% of your effect if you don't focus on performing well. So it goes without saying that you need to know your material so well that you don't need to try to remember it, right? When you're having a conversation, it's a completely different part of your brain working than you reading something that you memorized, right? Unless you're a trained actor. And I don't know, any trained actors in the room? No? Didn't think so. Oh, one, okay. So maybe for you it's a little different. But usually, you don't want to memorize a speech, right? If you do it enough times, and you do it naturally, like when I do a talk, it's always different. But it's usually, there's some similar phrases and things that I'll use that that kind of fit really well. And you want to get to that level where you can speak naturally about your product, about your company. And then you can focus on your performance. You can actively think about how you behave. What do I mean? So, here are my hints, and you're going to want to remember these. So first of all, confident stance. What does that mean? Confident stance is standing with your feet shoulder length apart. You're comfortable. You're not trying to balance. You're not doing this thing, right? Some people do this. So there's a what's called a parasympathetic response. It's a fight or flight. When people get nervous, they want to fight or flight. So they want to protect their stomach. They do this. It's called the body wrap. Right? You don't want to do this. That's a nervous, like, don't I look nervous? Yeah, a little bit. So people will interpret that as nervousness, or people will be on stage and like walking around. This is the flight. They want to run away from the presentation, right? You want to have a natural pace where you're addressing the audience, right? Open hand gestures. I do this a lot, right? So, again, you don't want to do this. This looks like I'm mad, I'm upset about something, right? If I'm doing this, I'm welcoming. I'm just shaking somebody's hand virtually, right? You don't want to point at people, because people don't like that. They feel like they're being accused of something. So you want to use open hand gestures just like you're using your handshake, right? You want to speak loud and clear, right? Especially if you're pitching in a second language or third language or fifth language, etc. You want to be able to project your voice, right? So sometimes your microphone won't work, and that doesn't mean your presentation is screwed. You need to be able to project your voice to the back of the room, right? And you need to practice. A lot of people need to practice that because they get nervous and that affects their voice box. Don't read your slides. Nothing worse than somebody doing this, right? And everybody's just, looking at the speaker's ass while they're sitting there reading their slides. You need to remember it to a certain degree, or you need to have less text, right? Don't read your slides. Only talk to eyes. This is super important, right? And it's a series of one-on-one conversations, these two pieces. So this is the biggest trick, right? You've heard of people saying, okay, well, if you're nervous going on stage, just imagine everybody naked, right? That doesn't usually work, and people don't usually do that. Has anybody ever done that and it worked for you? No? So what you do, whether it's an audience of 20 people, 100 people, 20,000 people, what you do is you make eye contact with somebody and you give them a line. You make eye contact with another person, you give them a line. This does two things. First of all, the audience feels like you're having a much more personal conversation with them, right? And the other thing is it'll slow you down. People get nervous, they get on stage, and they'll just machine gun through their presentation. And when you practice it, it's 3 minutes, but somehow you get off stage and you have like another minute left, right? That'll slow you down to a natural pace. What you're doing is you're having a series of one-on-one conversations. Whether it's 20,000 people or 10 people, pretend you're at a cocktail party and you're telling some friends and some new people that you met about your company, about your startup. That's all you're really doing. Just pick people in the audience and deliver them a line. And the last thing you do is you smile. Because people want to have positive energy. They don't want to see somebody that's angry. They'll smile back. They'll perceive all the information you give to them in a much more positive way. It works, right? You can move the audience on strings. So if I look at somebody and I shake my head, they'll do the same thing back, right? You can cue your audience. You can control the audience. And the way you do that is how you behave. So with that context, you should look at some good performers, some good speakers, and you'll see they're all doing these things. They're all doing this. They're using the same exact body language cues and the way they converse with the audience, and that's what's the bridge between them. And you want to get to that level where you're really comfortable. These things come naturally to you with time, right? And when you're focused on this, and you know your information really well, all of that together comes up with a great sales pitch and great story. So with that, if you want the slide, just follow my Twitter. I'll tweet it out. I'm working on a book. So for the last 15 years or so, I was fortunate enough. I've been involved with startups since the age of 13. I grew up in Silicon Valley, went to the same high school as Steve Jobs and Wozniak. I didn't realize the significance of that until way later. But since 18, I've been full-time with startups, and few years ago, I kind of shifted more into the mentor role because I went through the first wave of startups. I went through the second wave of startups. I founded a startup, raised millions of dollars, and started working with accelerators. And I keep getting the same questions all over the world. So this book that hopefully will come out by the end of this year is, if you've ever heard of the classic Pocket MBA, the idea is that startup accelerators are the new MBA, right? And everything that I usually teach inside of accelerators is there for you in one book. So you can check out the first chapter, download it, and would love your thoughts on it. So we'll do a quick video, and then we'll do questions, and then we'll be set.
I've got some business idea that I just want to tell you about, and I'll be a fool if...
Very quickly.
What is the most popular thing in the world?
Music.
No.
Tell me.
Ice cream.
Okay.
Everyone has it. And what is the problem with ice cream?
I have no idea.
It drips.
Okay.
So my idea is what?
Need to make a drip-proof ice cream.
No. Oh, that's a fucking brilliant idea, this. All right, whatever. You ain't going to come out with that, though.
No, I promise you I won't.
Well, my idea is to come out with just like these ice cream gloves that make the ice cream not go on your hands and make it all well sticky. And also keep your hands warm
Okay.
when you is eating the ice cream.
Okay.
Is you in or is you in?
Okay, well, it sounds like a good idea, and I hope you make a lot of money. Good luck, folks. It's been nice seeing you. You take care of yourself, okay?
Is you going to be in on that?
Well, it sounds like an interesting...
We've got like P. Diddy is going to be in it.
Good.
It is ice cream.
Do you want me to eat this?
No.
No, okay.
What's my idea?
Lay it on me.
The ice cream glove. That's a C, which means that you can't nick it.
All right.
Have you seen one of these things before?
Sure,
Everyone in school learns these things.
sure,
Venn diagrams.
sure.
People who like ice cream. People who has hands.
Sure.
What's this section here? It's our target market, isn't it?
Okay.
We did an intranet search for ice cream. We come back with 6,121 result. We did an intranet search for the gloves. How much results did we get? 325, 0, 113. So you times those together, what does you get? This is just people on the internet looking in. 203 zillion, whatever, 496,400, and then a 1. Check this out. If all those people bought one glove
Right.
at $19.99,
Right.
just one glove, business would be worth, wait for it,
I'm waiting.
that much. That is such a big number, couldn't fit it that way. That in English, 34.6 million billion dollars. How does we promote this company? We promote it with the strongest image.
All right. All right, that's different.
Naked woman on a horse. Shaven or with like bush, whatever. You know, money talks, pubes walk.
All right.
This may be the worst idea I've ever heard.
I actually don't dislike the idea.
Safe, respect.
Yeah, but I don't dislike the idea. You can use it, you know. It's not, there's something to it. This is not going to happen.
I've got another business idea.
Okay, what is that?
What's this?
That is a skateboard. No, it is a toothbrush. No.
Don't
Okay, good. What is it?
grow up, brain. What is it? We'll tell you what it is.
Oh.
It's a hoverboard.
I don't understand what you mean.
It's a hoverboard. As you've seen Back to the Future. As you've seen the bit where they jump on the board and it flies around.
Yeah.
It's in the future.
Yeah.
That film must have been about 10 years ago. No one has even thought about making that thing.
But it doesn't do that.
It doesn't do it yet. That's where you lot come in. You come up with the science.
We don't do that. This is nothing. It's a film.
Well,
It's a
they must have
story.
used the board from somewhere. They made one of them that
No.
worked.
No.
So how did he jump on it and fly all around? As all the chasers then?
It's called special effects. How do they do anything in a movie?
Good luck.
Put on the glove before you shake my hand.